All right, guys, welcome to another YouTube video with PrimeTime Pips. So in this one, we're going to actually go over the head and shoulders pattern, okay? Because that is something that still comes in handy for me. I mean, I'm a price action type of trader, but my head and shoulder strategy that I use and I share with my students on what you should be looking for, exact measurements in the market, it works. And this is in the free course part 2, which will be in the description below. If you want any of the free courses, they are always available in the description below. All right. So for those of you who just may be tuning in, I go over on this channel a lot of different Forex strategies, Forex terminology, things to do, not to do. I've been trading for years now, and I've learned a lot over the years. Am I the best trader in the world? No, but I'm very consistent and I make a lot of money doing it. So what I'm going to do here is draw head and shoulders for you. No matter how ugly it is, it'll be head and shoulders. It'll be head and shoulders. You know what I mean? Boom. So now we have our head and shoulders. So even if it's an inverse, I'm just going to focus on the regular head and shoulders for right now. The measurements that you want to see in this is you want to grab your Fibonacci first. And this works on any broker, anything that you see, okay? Whoever you're trading with or partnering with to get inside the market. Oh, get that off of there. Now, what you guys see, what I want you to really pay attention to, I want you to pay attention to the 50 and 60 retracement off of head and shoulders. This is my entry no matter what. Right? Because if we're doing a head and shoulders, we're not trying to take out this head. So I can have an order here and stop loss be at the top of that head. That's probably the only time I have a bigger stop loss of like 20 or 25 is when I do something like that. But normally when I'm in this trade, during the second shoulder, when it's making it like this, normally right after that, it shoots down. And where it shoots down at is right below here to collect up liquidity. That's sitting below the market right here, okay? So what I'm going to do really quick is remove that first and foremost. And we're actually going to find one. All right, let's find a head and shoulders or, well, let's actually go to a smaller time frame. We can see a lot more on that smaller time frame. All right, let's see. Excuse me. This is kind of a head and shoulders, but the right one, this is an ugly one. But even with this one, we can go back to this low before we made that next shoulder. Right in between the 50 and 60%. There's other reasons also why I tell my students to get in, but that, just knowing that, the 50 and 60 off head and shoulders, that by itself can get you plenty of pips and plenty of great entries inside the market. Okay, let's find another one really quick. This is going to be just a quick video explaining the strategy. Please look over it, watch this again, and just listen to everything that I'm saying all over. If I can't find one too quick, I will just end it. Oh, this is really ugly though. One, then we have the head, then you have the right shoulder right there. Now the head and shoulders is not going to be perfect all the time. Sometimes they're hard to see depending on who you are. If I was still getting in the 50 or 60, stop loss at the head here. Never got stopped out, went negative a little bit. But then once again, this is the 5 minute. But even if this was the hour, I went negative a little bit. And the price shot down and made me money. So how would this trade look like if I were doing it. So 50, 60, let's say I just got in here. And like I said, this is the 5-minute on US 30 actually. So I have a 240 pip stop loss because this is US 30. This is why it's so many pips. This is how I get like 1,000 pip weeks because I love trading this fucking thing. And we're looking for the low to get taken out, especially here. And there's a lot of liquidity sitting below this market. I mean, these lows here. So where would we want to put our take profit? We could put it right here if we want. So 1 to 8.9. Or if you wanted to actually take this out and go to this next low, that's always possible too. Because you see all the liquidity in the market. Right, so now we have a 1 to 3 risk reward ratio, risking 195 pips on the phone, on the 5-minute chart, to make 588 pips, damn near 600. Okay, I'm gonna delete this again. I want to find a clean one for you guys. Oh, here's one. Inverse head and shoulders right here. The shoulder, head, shoulder. All right, if you guys cannot see my cursor for some odd reason, it is right here. Boxing this up. So what we're paying attention to, the shoulder was made, the head was made. Now we have to find our entry. We go from the wick to the wick where price started to come down. And this one wicked pretty hard. But once we go up, we're looking to take out this high right here. All right, and same thing, if the stop loss is at the head, you would never be stopped out. Now, there's lots of trades where I have 8 pip stop losses, 6 pip stop losses, and wick entries that go perfect. But this is just a head and shoulder strategy that I'm showing you. Those perfect entries that you may see on Instagram. I post them, like I said, I post them all the time. Profits all the time, student profits all the time. It's on Instagram, and that's what I'm teaching you in the mentorship, how to be as accurate as I'm getting. But this here is just a free strategy for you to go back test. Find a head and shoulders, inverse head and shoulders. Like I said, I don't want to make this video too long, but find an inverse head and shoulders. And head and shoulders, and literally measure from the top of the head to the bottom right before it starts to make that right shoulder, and see if that comes up to 50 and 60, and just do it a whole bunch and see how many times it actually happens to where you're able to actually catch that and watch it run up again. It happens all the time, and it is a very, very accurate strategy. Trust me when I tell you. That is one, if I would say, retail way to trade that actually works a lot of the time. Yes, you're going to take losses on it, but your wins are definitely going to be taking those out, especially if you have proper risk management and you have a trading plan. That those little losses won't mean anything to you guys. If you're not used to losing, or you don't want to lose, get over yourself, because you're going to lose no matter how good you are. You're going to have losses. Okay, but other than that, guys, that's pretty much it. I just wanted to show you that really quick. Let me know what you think in the comments. Peace.